Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
Welcome to India Fintech Diaries, the show for all things India Fintech, and I'm your host Hemant. UPI today is a phenomenal growth story and is already clocking 14 billion transactions a month. But a new innovation is quietly preparing to turbocharge the UPI growth for the next decade, and this innovation is Credit Line on UPI. Now, to understand how Credit Line on UPI can unlock a $1 trillion payment volume opportunity, we have with us Sivaram Kowta, President Digital Banking at Zeta. Welcome to India Fintech Diaries, Sivaram.
Hi, Hemant. Thank you for having me over today.
Hi, Sivaram. And for ease, Sivaram, is it okay if I call you Shiva?
Of course, please. Everyone calls me Siva. It's perfectly fine.
Great, thanks. So, Shiva, you were a career consultant who then went on to head men's apparel at Myntra and then head business at ClearTax. Talk to us about your background and how your journey led you to the world of fintech and Zeta.
So I started out as an engineer, like most of the people back in the day. And in fact, I am a computer science engineer. I went on to be a software developer as well. I was with Wipro Technologies, and back in the day, it used to do fairly decent, high quality development work.
Mhm.
And ironically, I also worked on a financial application, building it from scratch, and had some good times back then. Then I went on to do MBA, and since then, I almost till Zeta have not been back with technology because after my MBA, I then moved on to consulting. I was with AT Kearney for close to 10 years, doing pretty much everything, but towards the last 6 7 years, specializing in consumer goods and retail. But a lot of the work I did there was enterprise transformation. So essentially, it meant unlike what most consultants do, I worked on multi-year spells with each client. So we did the strategy. We also stayed back to make sure that the strategy was implemented right. In some ways, that gave me the grounding required to do what I did next. Largely for personal reasons, I moved out of consulting after close to a decade. And then, as you said, I was at Myntra, where profitable growth was the key thing that we were trying to chase. Did that for a couple of years, and ClearTax was a different type of opportunity. Very small company at the time I went in, and there was a macro development like GST was being introduced in the country, and
Right.
these guys were trying to do something good there. So I joined them. In a brief period of about 2 years that we were there, we got almost 10-12% of the GST market in India, which was very interesting. But then with simplification in the GST law, etc., the role of software became a more long-term piece.
Hmm.
At that point, I looked at Zeta, which was trying to do what looked like an impossible problem. Still, a lot of times it looks like an impossible problem that they're going to disrupt banking, where you buy systems for life, right? Nobody ever thought that they're going to change their core systems, and
Right.
Zeta came in exactly saying we'll help you actually disrupt that. And it was not small. It was not saying I'm going to add something on the side or I'm going to add something on top of what you have. It basically says you can rip out what you have or you don't need anything else when you work with us. So that's what interested and excited me, and I've been here for about 5 years now. I head the India business for Zeta today, and I participate in shaping the overall strategy for Zeta, of course, as well as a relationship with HDFC Bank, among other things.
And right now, Shiva, what is the focus for Zeta within India?
Zeta is today focused on moving the credit line on UPI offering that we have.
Hmm.
We are extremely excited by what we see. For the past several years, post our post our partnership with HDFC, we have not focused on the Indian market beyond HDFC.
Right.
Because a sizably large client, but what
Hmm.
we see in the ecosystem is something very, very interesting. We are all going to see credit dramatically change in our lifetimes, and we said that's too big an opportunity not to participate. So we are now in the market talking about a overall digital credit as a service. That's the offering we talk about, which includes credit line on UPI, credit cards, other forms of digital credit, and so on.
Correct. And that's a good segue, Shiva, to our next question. Now, Shiva, the UPI juggernaut does not seem to be stopping anytime soon. It has already gone from transactions of about a billion transaction a month to 14 billion transactions a month within like 5 years. And credit seems to be the secret sauce that will power the next phase. And that's why you at Zeta are also very excited about that particular product. So, can you tell us a little about what credit line on UPI is? And in your opinion, what is the size of this opportunity?
So yeah, absolutely, Hemant. So see, India is by and large a deeply underserved market when it comes to credit. So I think by
Right.
any standard, 100 to 200 million users are credit underserved in the country today. And there have been, of course, so many, almost everyone's trying to chase that. By connecting this to UPI, which is today the world's most deeply penetrated payment channel, if you will, I think something major has been achieved here. So what credit line on UPI essentially says is that if you have a credit account with a bank, you can access that credit account via a UPI, via the UPI channel, which means you can scan the QR and instead of selecting the source as savings account, which we normally
Mhm.
do,
Right.
you can also select the source, the credit line. Now, this has multiple ramifications, and I'll talk about that. But first, just to say what the size of it would be. As
Mhm.
you said, yeah, there are 14, 15 billion transactions per month. As it stands, UPI is trending already $3 trillion annual spend annually, I mean, in the country today. We expect that to fundamentally grow, maybe potentially more than triple over the next 5, 6 years and be a $10 trillion spend over the next by 2030. And remember that UPI is largely a retail phenomena today. There is still so much headroom, especially when they bring in the business side of it, where the values generally shoot up quite a bit, etc. All that headroom is left for UPI. So $10 trillion by 2030 is pretty much doable or looks a very conservative estimate in my sense. We've looked at it in multiple ways, but we are saying 10% of that, that is about $1 trillion, is what will be driven by credit on UPI. So we look at the market as a $1 trillion spend opportunity. And
Mhm.
there are fundamental tailwinds that are supporting this. The credit demand growth is growing, especially for tier 2 and 3. Retail lending is already growing at about 12, 13% year on year.
Yeah.
And the kind of ease that credit line on UPI brings to the process of discovery, activation, and even utilization of this credit. So we can expect significantly higher utilization of credit also. So we think about $1 trillion of spend on credit line on UPI by 2030. And that's really exciting to us. So here we are.
And Shiva, you see the UPI even today is dominated by like three large players, which is Google, PhonePe, Paytm, and none of them are banks. But as you rightly said, the credit line on UPI has a potential to help the banks level this field because they were slightly late to the party at the time of UPI. Now, why do you think bank will win this particular race against the fintechs? And what are the strategies that they can use to establish their dominance in this particular space?
So, see, currently, of course, only banks are allowed to participate in credit line on UPI. So it's a
Right.
natural advantage. We can
Mhm.
expect the regulator, though, to at least selectively allow NBFCs to participate on this soon. But banks will still have a natural advantage because
Right.
they are the only ones who have this large CASA base that is pre-approved. Their cost of funds are fundamentally lower than the fintechs or the NBFCs who will be. So and they have a pre-approved base. So their credit underwriting is a lot more robust compared. They don't have to afresh. So they know their customers in the true sense and they've underwritten them. And
Right.
they have the ability to cross-sell other banking products. So in all senses, banks ought to win with credit line on UPI. What the banks lack today is probably the right modern systems, the IT and the
Mhm.
other systems that will allow them to move with the right agility and to build those cutting edge consumer experiences.
Right.
I mean, I do expect banks to take this very seriously because it's already the second coming for them. Like you rightly mentioned earlier, with UPI also, they were largely unprepared, and the
Right.
scale and load surprised them. They
Mm.
recovered, but more or less they ceded the entire payment space, and with it, the right to engage the customer over to the fintech players. Now,
Mm.
credit line on UPI is like a fresh opportunity, and so we all certainly expect them to take it up very seriously.
Right.
Credit line on UPI solves a number of long-standing problems for the bank. For example, they've carried these pre-approved customer base for a long time without much success. So they have a large CASA base of customers. They know they're credit worthy. However, they don't have an active engagement with the customer because the customer does not really visit the branch or use any of the bank's properties. They may be holding the bank's account, but then they go to a UPI app, access the balance from there, make payments from there, and that's where. So in all practical purposes, they are not the bank's customers, the customers of the UPI app. Now, credit line on UPI allows you to engage with your customer. So it's they've got a huge pre-approved base which they could not engage, and now they can actually go out and engage that base. Another problem the banks have is utilization of their credit limits. So every bank, or for that matter, every lender is looking for good quality customers who have good scores, who can be underwritten for higher values. Now, they have a problem of utilization of a approved credit limit or sanctioned credit limit. Let's say Hemant, you've been accepted by the bank for a 5 crore home loan, but you needed only 3 crores and that's what you took, but
Right.
the remaining 2 crore is now left unutilized and the bank doesn't like it, and they don't have
Hmm.
any other method of actually engaging with you to ever make you take that 2 crore. By the way, a year down the line you decide you needed a interior decoration budget and you have to go back to the bank and do the whole process again. But now with something like credit line on UPI, the bank could give you the option of saying, hey, take this home loan. By the way, take a top up called the interior decoration top up, which is a line, and
Hmm.
just go ahead, do your shopping. As you finish your shopping, just pay for it using this line, and you don't have to be in touch with the bank and only pay for what you use. So suddenly the utilization of a very good customer has gone up. So the bank would like that. So it solves that problem. The third problem it solves is priority sector lending. So most of the banks actually today create specific products to make sure they get the PSL targets.
Hmm.
So if there is a product for education loans which can be treated as priority sector, they will have a specific loan product called education, and then the feet on street will make sure that product is sold. But they miss out on a lot of the opportunities that they have otherwise. But with credit line, they get detailed tracking of what the loan is being used for or what the money is being used for in real time. So they could have given a credit line without any specific requirement or specific usage, but I went and paid the school fee. Because I paid the school fee, the bank can now treat that particular part of the transaction or of the loan as priority sector lending because it's part of the education and so on. So they get that advantage. There are a number of such additional advantages. Or
Got
and the one final one I will share. If you look at
Hmm.
some of the smaller banks should be extremely excited about credit line on UPI because it levels the playing field in multiple ways for them.
Hmm.
You look at all of our experiences when we go into a electronic store or consumer durable store. Most of the time we have somebody there who is a bank representative offering us a EMI program or something of that sort, right? That you can buy it
Right.
on the cost EMI. Usually, it is the top banks who are able to put those feet on street. Even those
Hmm.
banks are limited in where all they can put, but the smaller banks have no chance. Right? A bank sitting in Kerala will find it very difficult to come out and put people out in Bombay and all over India and so on. With credit
Right.
line on UPI, for the first time, something like an issuer subvention becomes a reality. So the bank doesn't need anybody in the store to enable this. They can just give their customer the credit line. The customer decides to buy their goods, let's say a plasma TV, and make the payment, and subvention or the EMI program starts straight away. So without having feet on street, a significantly simplified process can now be done, which means that the smaller bank can compete with the bigger bank to say, as long as I've got my customer and I give them a good rate of rate of interest, etc., no reason why the smaller banks product should not win over the larger bank. So it levels the playing field. So therefore there are a number of things that are working for the banks. I expect them to, and I sincerely hope that they do take it by both, grab it by the horns, as you say, and
Right.
win it this time at least.
And Shiva, considering the nature of the product, you're right. For a certain category of customers, it might take the form of affordability sort of finance. but those would be select events over a period of time, right? But for a very, very large group of customers, people like you, me, it may also take the form of convenience purely, right? Because it is available, it is so easy. I may spend via credit where I could have spent using a standard credit card. So basically replacing that payment, or I would have used my debit or savings account to make the payment. So there would be many other ways where the bank would like the customer to discover credit line on UPI, because the earlier there was also another credit on line on UPI which was connected to overdraft, but it never caught on. And one big problem was people did not knew about it, or they did not discover it at the point of transaction. So could you talk to us about, in your conversation with banks, because you must be having so many of them, has this point come up of how do we make it easy for the customer to discover? One example gave was at consumer electronic stores. But other than that, slightly higher frequency transactions where we could help the customer discover this particular product.
Yeah, absolutely. So discovery, by the way, as the protocol from NPCI has come, it does not
Mhm.
address the discovery problem.
Right.
They have used much of the same rails. So like earlier with a savings account, where if you have to
Mm.
open a savings account, you don't think of UPI. You go and do that directly with the bank. However,
Correct.
once you've opened it, you can then get it onto UPI rails. Similarly, so is the case here. Having
Mm.
said that, in case of credit, because it's a more complex product, requires underwriting, requires a lot of to and fro before a line is opened.
Right.
There's a lot of focus on making sure discovery is solved. We,
Mm.
of course, as Zeta do offer quite a bit on how we enable discovery. There is a complete product for online onboarding, online discovery and onboarding that we can power a bank with. It is beyond what the NPCI protocol today allows. From the digital public infrastructure side, we are watching with keen interest, the recent announcement of ULI that the RBI governors just spoken of. They
Right.
have some in they earlier had frictionless credit as the initiative. They have called this ULI, Unified Lending Interface.
Mm.
We're watching that with keen interest about how that develops. It should really smoothen the process of really discovery and onboarding new people onto the bank.
And Shiva, one of the key factors for credit line on UPI is going to be technology. So, can you help us understand what are the different tech components that a bank would need to successfully launch the product, and what would be some of the critical success factors for it?
Oh yes, absolutely. So today, the first instinctive response of a typical technologist or a banker is to think about, let me take one of my existing credit products and link it to my UPI switch and get started. Now, bank typically has these three systems, right? Of course, they have a loan management system, an LMS, from where they disperse loans. The core banking software, also like the overdraft systems, etc. Also,
Mm.
the core banking also supports, as well as the credit card management system, the CCMS also supports. So the first challenge there itself is what is the right system that they would choose. And mind you, all of this thinking today is led by the thought that credit line on UPI is a product and we need to think about one product that we will launch. But
Mm.
already in our conversations, we realize different parts of the bank actually do want to get onto credit line on UPI bandwagon. So there is a Kisan credit card team which wants to launch on credit line because they see the synergies. There is the retail team which wants to, of course, put products out there. There are business banking teams which say we can do a lot with it. And literally every team in the bank which today has a credit product is thinking about how can they get onto credit line on UPI. And that's the first important insight or understanding that everyone should get, is that credit line on UPI is not a product. It is actually a distribution channel.
Mm.
So if it's a distribution channel, just as a branch of a bank, when you open a branch, you don't necessarily say, I will only sell savings account, I will not sell the others, etc. A branch will sell, or a channel will push all products that the bank has based on the relevance. This is a super highway of credit distribution that is getting created. So the choice of the system needs to be such that you're able to handle all the credit products of the bank, period. And by the way, till now, the bank has approached credit in these three or four or five distinct buckets. Right? There is no single system that the bank has that can simultaneously address a credit card like credit product, or a buy now pay later like credit product, or a personal loan like credit product. They have historically used different products or different systems to serve different products. So the first consideration and the problem the banks have is which product should they or which system should they take? And our belief is unless they are very small and have very moderate ambition, banks will struggle trying to repurpose any of their existing systems. So this is the
Mm.
first technology factor that will be a problem. The second thing will be in the design of the product itself. So it is credit line, and NPCI has very in a statesmanly manner not defined what exactly credit line on UPI should be. They said it is up to the issuer to figure out, which means they have
Mm.
an open canvas. They have an opportunity to reimagine credit products in India. That's why I say it's once in a generation. For example, if 80% of India is not salaried, then why are almost 100% of EMIs only monthly? Why are they
Mm.
not in any other form? By the way, the answer is very sad, that because the legacy systems that are currently in use only support that as the duration. Right? So you've seen 7-day, 21-day, and 30-day because that's how a
Right.
particular LMS might be supporting. When you think about fundamentally, how do I reimagine my product? I think because that will be key to how the products make money. Otherwise, they will end up with products that will lose money. BNPL being a classical case, I think a lot of players tried their hand at BNPL only to realize that when you lend small ticket collections a problem, NPAs
Right.
are high, and so on. And now the interchange is also announced, like it is 120 bips about 2000 rupees
Mm.
for material categories. The bank has to really think about what kind of product. Are they going to launch, say, an EMI product where they say if you want to buy something for 10,000 or more, then you think about this. By the way, below that, I will not even honor the payment itself. I will flunk the payment.
Mm.
Or do they want to think about a subscription model where they say it's all right, you can spend as small an amount as you want, but in a month, I would like you to get to at least this much spend with me. Otherwise, I will charge a certain fee. So, how do you make sure that the financial viability of the credit product is also achieved? I think the business teams in the banks will be able to think about multiple options, but they will run into the challenge of technology because all the current systems that they have were built for different purposes. They support only a limited and rigid form of fees and charges and forms. For example, a subscription, for example, a processing fee that is applied, or that's only applied for transactions of certain low value, etc. There are multiple considerations which the business team might like, which they may not be able to do in the current systems. And a couple of more points.
Mhm.
What credit line also represents is the marriage of a loan management system of some form, right? In some ways, a balance sheet product with the transaction processing systems. So you're marrying two very different things together. And loan management systems were never built with the idea that they will be real time transactions and reversals, etc., that are happening. So this is not an easy marriage. There are lots of
Mm.
considerations which are not solvable. For example, a cooling off period. Let's say somebody has gone to this electronic store, bought this plasma TV for 1 lakh rupees, but then they partially got a refund. Now, how do you handle the loan? I gave you a loan of 1 lakh because you did that transaction, but then 2 days later there was 10,000 rupees refund that came on that. Do you
Mm.
reamortize the loan? Do you, and if you do so, do you actually pay back the processing fee or is it gone? The business teams will be able to give definitions which are consistent about how they would like to treat the customer, but can their systems handle all of it? And how do you handle repayments? How do you handle the EMI scheduling? These are questions which are not answered in the current systems because they never had to be. So transaction and loan management pretty much never handled together. In fact, a lot of these loan management systems are quasi online, quasi offline systems. You don't need them to be, very oriented to the transaction world because you take a loan and then every month you pay an EMI. That's the extent of interaction with that loan system that you have. And of course, from there comes the other point that it's fundamentally a transaction system. So the amount of scale we can expect. Already the banks are, I think, still smarting from the wounds of the UPI scale and load.
Right.
UPI on credit or credit on UPI is going to bring its own scale. In fact, there are parts of the protocol where it means that an UPI app can check whether this account can be used in a particular transaction without the user needing to authenticate it. What I mean is, I may have gone to the store, I may have got 5 different credit lines with different banks. When I try to scan, my UPI app will go and check with each of the five banks whether
Mm.
they will honor this transaction. And it will get what is called, they'll get back the key terms for that transaction before the transaction has happened. I, as a user, have not done anything except scan the QR. So I have not entered a PIN or anything at this point.
Right.
So we can expect a huge volume to already be generated. That's multifold, 5, 6, 7, whatever times of the actual transaction load. It's an inquiry volume. The inquiry volume will be very large. Are the banks prepared to handle it? Have they thought about it in that way? And finally, in what I just said, that there is the element of dynamic pricing built into credit line on UPI, which means we are all used to a world where I have a loan, the loan is at 14%, and that's it, right? And yeah, the bank may
Right.
revise it time to time, but that's it. The same with an overdraft. Overdraft is made available to me at say 9%, 12%, and that's it. However, with
Mm.
credit line on UPI, the protocol allows the bank to respond to that inquiry with custom terms. So basically, I as a bank found out that my user is standing in a consumer durable store with someone who I have a relationship with. So bank A has a relationship with, brand, say Chroma or somebody. They can actually offer custom terms to say, oh, because you're in that particular store and I have a deal with them, I'm going to
Mm.
give you 12%. Or you know what, I actually have a deal and I'll give it to you at zero cost EMI. So that can be done. If I separately found out that you are in an auto dealership trying to buy a two-wheeler bike, I can
Mm.
offer you an auto loan at that point, the terms of an auto loan, right? This is the interest rate, these are the
Got
terms,
it.
etc. So dynamic pricing, and you can literally push multiple credit products through the same line. To take advantage of it today, how do you do so? The protocol allows, suddenly the banks find they don't have any systems which support this.
Mhm.
And the last couple of things are, one, we may not think about it actively like that, but UPI is fundamentally a digital led ecosystem. Everything about UPI is digital. It is 360-degree digital. We access it on the phone and only on the phone. Customer support is via the phone. Bulk of the user experience of a UPI of the UPI experience is delivered by the UPI apps who've taken a highly digital oriented route to everything about it. So now, when credit line on UPI is coming together, the bank cannot bring its current credit or loan experience over to the customer. At least I feel the customer will simply reject it. So, a huge, huge work in front of the bank is to deliver an end-to-end digital customer experience, even with respect to credit. Right. So, the digital origination, digital customer lifecycle management, digital collections, digital rewards, all of that is not something that the bank has been great at. It's one of the things they are poor at, and that's an focus area for them to win. And finally, how will they distribute, big or small? I think of the last few years, everyone's been in, working with partners. In credit cards,
Right.
we've seen co-brand partnerships, really drive the penetration of credit cards. It will, I fully expect it will also have an opportunity here where some of the largest e-commerce and fintech players will want to partner with banks and take this forward, because that's how they will participate. So is their infrastructure, the bank's infrastructure, is it partner ready? Is a question to ask, and most of the banks would fall short of handling partners in general, and handling a large number of partners. I think almost every bank is going to fall short, and they wouldn't have the right infrastructure today. So
Got it.
these are some of the technology considerations that they have that the
Mhm.
banks have to think about. But if they do, there's a good chance that they will actually win in this space.
And Shiva, because of so many considerations and requirements that the bank have, in May this year, Zeta launched its credit line on UPI stack in an event in Mumbai. I'm very sure the different components or issues that you highlighted are the things that are being catered to by the product that Zeta has launched. But if you have to quickly summarize on saying these are the top components or key components that comes with the stack, which makes life easy for the bank, and point number two with it is, how does the stack work with the existing set of application? Because you rightly said they already have credit card, LMS. There's a different beast. But then how does it sit and work together with the existing components? You can answer those two questions.
So Zeta is a banking tech company, and we built Tachyon, which is the next gen processing and banking stack.
Hmm.
And globally, we work with large issuers. In India, we work with HDFC Bank, and we power PayZapp and which is the digital payments behemoth of HDFC, and the Bond Digital Pixel credit cards. Both are doing extremely well. We recently had a fantastic Pixel campaign. The first ATL that they did also went extremely, was very well received. We've also recently started working with them on credit line on UPI itself. Globally, we of course work with fairly large issuers. Several of them are in the process of controlled go live with us, and over the next 3 years, we should see about 40 million cards enter into a live situation with our stack. So in India, we looking at all of these challenges that the banks would face, even to launch a basic product, and the further challenges they would have to actually make full use of the opportunity. So we've shaped up offering to be, so we call it digital credit as a service. So digital credit as a service is a ready to deploy, fully managed offering that comes with pre-integrated capabilities across the entire value chain. So starting from origination to provisioning to the complete processing, lifecycle management, all of the digital experiences and data analytics. All of it is provided to the bank as a service. So our core offering is the end-to-end processing service. So transaction processing, account processing, pricing, and line management is part of the core processing offering. And but we do offer a bunch of accelerators in the origination, in the provisioning, in lifecycle management, digital experiences. Now, all of these are required one way or the other for the bank to have a complete product. If you take our accelerators, they give you speed to market because these are pre-integrated, they are fully compliant, and they are auditable, and you can hit the market quickly. And we assert that each of these products would be best in class in that category. So we also, for example, as part of lifecycle management, or we have our own fraud and risk management service. So the kind of rules that you can configure would not only be what you are already a bank needs to configure, but in addition, everything else that the new world of transaction processing and the risks that it brings are also handled by it. And it has state of the art case management capabilities as well. So each and every part of the cycle, we see a lot of interest from banks because we are coming in and essentially saying that in this highly uncertain times where you're not sure how to proceed forward, we are able to offer you an end-to-end solution. We are able to work with you with minimum disruption or no disruption to your existing processes and your existing systems, because this is completely sitting on the side in parallel, and we will get you live. Zeta becomes your internal program manager who is responsible for the end-to-end outcome of making sure that digital credit or UPI on credit line actually works.
Got it.
In addition, the second part of the question you asked about how do we work with an existing system. So first, we work with the bank to make sure that they have defined the product on what the product definition is. So ultimately, when they report it to regulator, it has to either be a loan, it has to be a term loan, it has to be a EMI loan, it has to be a credit line like product, it has to be an overdraft. So there are certain financial products, and however you innovate, you have to declare the product to the regulator to be one of these kinds of products. Once that is done, we of course work with them to make sure that we are able to configure the entire product end to end and help them go live in as short as 90 to 120. But also, our reporting engine will be able to generate regulatory reports exactly in the formats and the data structures that they have that they use for their reporting today. So the job for the bank becomes significantly more straightforward, because today they were, let's say, they decided on a overdraft like product, so they have a certain format in which they did their reporting today to the regulator. When this product is launched, they get the same report in the same format. They have to take both and then submit it to the regulator. We also bring in process consulting. So we have a fairly experienced team of process consultants who would come and engage with the bank to make sure that this process I just described is actually, thoroughly butter smooth. We are doing this with some of the largest banks in India today, and we are confident that we can do it with the next one that we work with as well.
And Shiva, I don't want you to get into numbers, but can you help us understand what would be the commercial model on which a company like Zeta, which is providing an offering, a stack in the credit line on UPI, would work on? What would be the commercial model?
Yeah, sure. So we fundamentally, from the beginning, have been very clear that Zeta as a company will make money provided our customer and clients make money. So our
Right.
entire model has been pay as you go model. So there is a small setup fee to get started, but bulk of the commercials are such that it's on a pay as you go model. So as the product scales, is when the bank pays for, say, the transactions or number of users, number of active users, and so on. So the complete SaaS commercials are based on that. We also provide studio services. Studio
Mhm.
services are professional services that are required to, say, customize the product or build any custom components or do any custom integration. So the bank may say that I have my own systems and we would like the CLOU product to link back into that. May be it, say, identity. How do you identify that a user belongs to the bank? The bank may say, I have my own system, please connect to it. And that can be for any number of systems the bank may ask us to connect. And there may be other custom work that the bank may want to do to get its product to life. So we also offer professional services where there's a rate card and we would follow that model with the bank. Yeah.
Understood.
So
Understood.
importantly, we don't follow it's not that the banks have to incur a large upfront expenditure when they engage with us. More banks ought to be able to onboard with us and start. And we share success. We also take a risk. So we have thorough skin in the game as we go along this process.
And Shiva, you have covered a lot of what you spoke about your perspectives on the size of credit line on UPI and how do you see it evolving in a recently launched report called Chak India, Democratizing Credit with Credit Line on UPI.
Yeah.
Can you give us a brief view on what the report covers and where can our listeners actually find it and download and read it?
Of course, I mean, to find it, if you look for Chak India democratizing credit with credit line on UPI on
Mm.
Google, it take you. It's
Okay.
available on our website. Simply need to enter a few details and you can download the report. It's free. The foreword has been written in by Mr. Parag from HDFC Bank, and the introduction chapter is by Deepak Sharma, who's the ex Chief Digital Officer of Kotak Bank, all of which essentially talks about how exciting credit line on UPI is and how it's going to change the credit landscape of India positively. The core of the report is structured into four parts. We first discuss how the 1 trillion hyperscale, how is that actually going to come about? We then identify what are the key advantages that banks have from credit line on UPI. How do you go about being ready for implementation? We saw a lot of confusion, a lot of uncertainty on how to progress, and hence we had, in fact, that's why we wrote the paper in the first place. So
Yeah.
achieving implementation readiness for credit line on UPI is the third topic. And then we specifically discuss 6 strategies on how banks can win with credit line on UPI. As part of that, we talk about aspects like how bundling could be an aspect. I gave you the example of the interior decoration loan with house loan, but you can extend
Right.
it to any credit product. You could say living expenses top up with the education loan. So students would like it and so on. We discuss how a bank can think about multiple credit lines. It's not a single product. It's not just a consumer durable product or this product, but if any product can be going through the same credit line. So we discussed 6 different overall strategies as part of this white paper.
Actually, listening to you, Shiva, I am excited as well, extremely excited about now Credit Line on UPI. And I'm sure that you have spoken about the report and the listeners would find it very, very interesting to go through the report and understand it. Now, if the listeners, after going through all of this, are as excited as we are on this and want to reach out to you or Zeta, how can they do that?
Yeah, they can literally just reach out to me. I am on LinkedIn. If you want a more structured response from Zeta, sales at the rate zeta.tech, you could write in. If you have a sales context and wish to talk to us about that. If you just want to have a chat, I am on LinkedIn. Deepak Kumar is our vice president and head of product. He's also on LinkedIn. You could reach us directly on that.
Thanks a ton, Shiva. What I'll do is we'll include those details in our show notes. And thank you once again for this very engaging and interesting conversation on Grid Line on UPI and getting us excited as well.
No, my pleasure. And thank you very much, Hemant, for having me today.
That's it from India FinTech Diaries this week. Do log on to our website indiafintechdiaries.com for show notes and other exclusive content. Until next time, stay safe.